In this section, we're going to talk about how to use pivot point levels to trade breakouts. Similar to your regular support and resistance levels, the market isn't always going to bounce off of pivot points. Sometimes it'll just break right through them. So when the market does break through, you should be ready to capitalize on it. If you remember from the earlier support and resistance module, there are two different ways to play the breakout. There's the aggressive way or the conservative way. It's the same case here, and either of the two methods work fine. Just remember, the one risk you run with the conservative way is that it may not retrace back to the pivot point again to retest it, and if you're waiting on that, you may miss out on the move. So let's take a look at this chart to see potential breakout trades using pivot points. Here we have a 30-minute USD CAD chart. Here we can see that price has recently bounced off of an R1 resistance line and is now heading down. It is right at the pivot point line and appears to be breaking through with a strong bearish candle. You decide to trade the aggressive way with the break and place a sell trade right away as it broke through the pivot point line. If you had done that, you would have made a great profit and caught the entire break. On the other hand, if you had taken the safe way or conservative way and waited for a retest, right, so it comes past the pivot point line and you want it to retest this line, you might have missed out on this one. However, trading breakouts aggressively does not always work. In fact, look what happened right before. You can see that there was a strong bullish candle that pushed up past this R1 resistance line, but if you had gotten in here, it would have faked you out and came all the way back down this way, and it probably would have hit your stop loss. So moving forward here, let's say that you think the market is going to break through the pivot point level now, but this time you want to play it more conservatively. So you're going to wait for it to break through and then bounce off and then get in. So you see the market broke through, it retraced, and then you placed your buy trade right here. So let's see what would have happened next. There you go. You would have made a nice little profit on that one. So you can see how the aggressive and conservative way to trade breakouts of pivot points and how sometimes one will work better than the other. One thing I just want to note here is something that's called role reversal. And you may remember that we talked about this earlier, but what it means is when support levels break, they usually turn into resistance levels, or when resistance levels break, they usually become support levels. And knowing this can help you be confident the moment when you get into a trade as well. That's why, for example, here, as it broke through this level, this resistance level became support right here, and it bounced off and started going that way. Now let's finish up this section with where you place your stop loss and take profit with breakouts. With breakouts, we're looking for strong, fast moves, unlike with the bounce. Once a level breaks, in theory, that level will become support turned resistance or resistance turned support, right? So, for example, let's say the market was coming up this way and you were going to go long once the market broke through the R1 resistance level. You could place your stop just below the R1 resistance level. This would be a good place to put it because the R1 resistance level, once broken, becomes support. So you're putting your stop loss below support. And for the take profit, a conservative take profit would be somewhere between the two pivot point lines. So for example, once this broke through here, you could have had your take profit here in the middle, and you can see you would have capitalized on that. But you could also put it up at the next level. Putting it up at the next level is a little bit more aggressive. And for example, this market actually, after this, moved back down this way. So if you'd put your take profit up here, you might have missed out on some profit. However, if the market were to keep moving up to the next pivot point level, then you would miss out on profit if you had your take profit somewhere here in the middle. So you can decide where you want to put that. Before moving on to the next section, I want to give you just 3 quick warnings or reminders about trading breakouts. First of all, you really have no idea whether the market is going to continue to move in the same direction or whether it's going to bounce off of these pivot points. You might be thinking it's just going to continue right through, but instead it's just a fake out and shifts the other way, right? Second, important news can affect the market and cause spikes, which may cause the market to look like it's breaking out, but really it's just a news event causing volatility in the market. So make sure you know what's going on in the news for the week. And remember, you can always go to forexfactory.com to see what important news is being released around the world. Lastly, just like in range trading, it would be a good idea to map out the other key support and resistance levels in the market. Sometimes it may look like R1 is breaking, but there may be a strong resistance level just on the other side of R1. So price may break past that R1 resistance level, but it may bounce off the major resistance level. You should always use more than just one indicator to help you get a stronger signal. We've gone through that plenty of times, right? And this will help give you a better confirmation of whether or not it's really a breakout. Remember, you have your entire toolbox full of momentum indicators, support and resistance, candlestick patterns, and much, much more. So combine those with pivot points, and that'll give you better entries.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.